What's up everybody? Welcome to the Stocks channel. My name is Cory, and in today's special weekend update, we're going to take a macro level view at the stock market. It's very important when you're analyzing the stock market to look at various time frames. So today we're going to take some time to look at the weekly time frame as well as the monthly time frame. If you're a follower of mine, you know that daily we look at hourly and daily trends, but it's also important to look at the weekly and monthly trends as well. So today we'll first take a look at the NASDAQ 100, and then we'll take a look at the S&P 500 and the Dow Jones. We'll also throw in some bonus charts like Bitcoin and rates to also see what's going on in those markets as well. This should help you get a better broad view of what the stock market is doing and what the bigger picture of the stock market actually is at this point in time. So first up, let's take a look at the NASDAQ 100 NDX. So let's crack open this chart and see what's going on in the stock market today. Alright, so the first chart we're gonna take a look at is the NASDAQ 100 NDX. Now this is a weekly chart, so every single candlestick that you're looking at on this chart does represent one entire week's worth of price action. So this helps us get a better macro level view of exactly what's going on in the NASDAQ 100. It's very easy to get caught up in the day-to-day trends and the day-to-day price action and forget about the bigger picture. So the first thing we note on the NASDAQ 100 is we want to watch the price action. We see the price action close right above the 20 simple moving average. Intra-week, we were trading much lower, and if you were trading the stock market, you know that we did have a very volatile week. We can tell from the price action that we've been in a decline for the last 3 weeks in a row, and it does look like we're in a falling knife scenario. So the price action is definitely looking bearish, but the good news is that we're still holding up above that positive sloping 20 simple moving average. So the next thing I want to take a look at is the trend. What we have here is a 5 EMA, a 13 EMA, and a 20 simple moving average. In order to identify the trend, we want to take note of these moving averages, and if they're all stacked to the bull side, we should see the 5 over the 13 and the 13 over the 20. Currently, we do still see a bullish trend. The 5 EMA is above the 13 EMA, and the 13 EMA is also over the 20 simple moving average. However, we can also note that the 5 EMA is negatively sloping, and it does look like it could cross below the 13 EMA if we get one more negative week. So if the price action continues to head lower coming into next week, we could see that 5 EMA cross below the 13 EMA. However, we don't want to guess, and we want to let the price action tell us exactly what's going on in this market. That's why I do daily analysis, and that's why if you've been watching my daily analysis, we have very specific resistance levels that we're paying very close attention to. What the price action does at those resistance levels is going to tell us whether the market goes lower or continues to go higher. Now I say continues to go higher because if we zoom out here, we can definitely see that the stock market is in a very strong uptrend. That's called a bull market, and it means that we want to remain bullish in the medium term because the weekly chart is still telling us that the NASDAQ 100 is in a bull trend. Another thing I want to draw your eyes to is this close that we had back in October of 2020. We did have 3 volatile weeks in a row, and we did close right on top of the 20 simple moving average back here in October. Why is that noteworthy? Is because we're in a very similar scenario with today. We had 3 negative red weeks, and we closed right on top of the 20 simple moving average. So in a bull market, we eventually expect to see buyers step in and buy the dip, but in bear markets, we expect to see sellers coming in, and we expect to see more sellers picking up as the stock market bounces. So it's still too soon to say if we're going to bounce off this level because we need to see the price action, but there is something to note that there is a very bullish week after we close on top of that 20 simple moving average. Back in October when we had these 3 volatile weeks, we had a huge green week following the volatility. So just remember there is a very bullish probability that we bounce off of this level with a lot of buying pressure and a lot of force. As you can tell from this candlestick that we had in November, a lot of buyers stepped in and we had a very green week. Now to the bear side, if we see the price action crossing below the 20 simple moving average, it's going to be very likely that we retest the 50 EMA on this weekly chart. So from Friday's close, if we did go down that low, that would be about another 9.5% decline. So we're already down about 10% from the highs, so that would be about a total of a 20% decline. That is your bearish scenario that we need to watch, and on the daily chart, we do have very specific support levels that we're paying attention to. If we start getting price action closes below those support levels, it is very likely we come all the way down to NDX numbers of about 11,500. So right now, if we're strictly looking at the price action and the trend, there's still no reason to become bearish on this market quite yet. As long as we're above this positive sloping 20 simple moving average and we still have the bull trend with the moving averages, then there's still reason to believe that this market could remain bullish. Now jumping over to a monthly chart where each candlestick now represents an entire month's worth of price action, we can also see the price action is still above a positive sloping 5 EMA. We can very clearly see that all of these moving averages are still stacked to the bull side, and on a monthly view, which is more macro level than the weekly view, we can still see that we're in a very strong bull market. So even with all of the recent volatility in the tech sector, we're still looking very bullish on this monthly chart. Obviously that's subject to change, but this is a macro level view and it tells you to not get too bearish on this market just yet. Yes, we had a very volatile few weeks, but from a monthly standpoint, it's really just a blip on the radar. Remember, this is more macro level, so a volatile week like last week really doesn't look that bad on this monthly chart. Now jumping over to a 1 hour chart on the NDX, I am watching very closely this resistance trend line. If we see the price action come up to this trend line and get rejected, that will give us more likelihood that we're going to see more downside. If we get up to this trend line on a 1 hour chart and blast right through it like it's not even there, that's going to tell us that we're likely going back into a bull market on the daily chart. So as you can tell from these time frames, you see a very different picture. On this monthly chart, you can still see we're in a very strong bull market and it doesn't really look like much damage has been done to this chart. On a weekly chart, you can see that we're on a very critical support level, which is this positive sloping 20 simple moving average. So this critical support, if it does break down on a weekly chart, will tell us to expect lower prices. On the daily chart, you can see that we're already breaking down below critical support and we're currently trading below the 50 EMA and it looks like we could go much lower. And then on the 1 hour chart, you can see that we're currently bouncing and it looks like we're trying to get ready to come back up and test this resistance level. So it's very important when you're doing technical analysis to be aware of all of your different time frames. There's some time frames that could look bullish, while there's other time frames that could actually look bearish. That's why when you hear me doing my technical analysis, you're going to hear me say things like short term, medium term, and long term. I do understand how confusing it can be when I say that I'm bearish in the short term, but bullish in the long term. Hopefully this better helps you understand why I speak like that, because if I'm bullish in the long term, I'm more likely talking about a weekly or a monthly trend. If I'm bearish in the short term, I'm more than likely talking about a daily or a 1 hour trend. So it's possible that I could be bearish in the short term, but still be bullish in the long term. Also, please remember, if these educational videos are helping you out, please smash that like button to help more people see these episodes. I'm a big believer in education and learning, and the more people that hit that like button, the more it helps the YouTube algorithm spread this episode to more people to see. One more thing to note is why I'm spending so much time on the NDX and the Nasdaq 100 is this recent sector rotation that we've seen has mostly affected the tech sector and the healthcare sector. We did see a tech correction over the last few weeks, even though we did see strength in some of the other sectors like financials, industrials, and energy. So the next thing I want to do is take a look at the S&P 500. So now we're looking at the SPX, which is the S&P 500 index, and this is still a weekly chart. So every single candlestick on this chart still represents one entire week's worth of price action. So as you can tell on the SPX, we had a much more bullish close on the weekly chart. We did come down near that 20 simple moving average intra-week, but we didn't close on it. We closed much higher above the 13 EMA and very close to the 5 EMA. You can see all of these moving averages are still stacked to the bull side, and we're still maintaining a bullish trend on the weekly chart. Now this is because the S&P 500 has a lot of sectors in it. While it is mostly tech heavy, being over 30%, it also has those other bullish sectors that I talked about, like the financials, industrials, and energy sector. Those sectors are helping keep the S&P 500 afloat while we see healthcare and tech selling off. So if you really think about it, a tech and healthcare sell-off doesn't mean that the entire stock market is going bearish. We still see strength in other sectors, which means money is not leaving the stock market, it's simply moving around. When these big money players move around, think of it like an aircraft carrier trying to turn in the ocean. It's going to take a long time to change direction for such a large ship, and it's going to create a lot of waves. Those waves are volatility, and it's going to cause retail to panic. When people are panicking, don't expect to see the stock market going higher. People are going to be panic selling all over the place, and the volatility is going to keep rising, which is only going to be a domino effect. However, eventually those big money players will stop rotating their money around and the volatility will subside. When volatility subsides, the fear also subsides with it, and we will see the stock market start heading back higher. However, that means that the big money players have to actually stop selling before we can see that. If they continue the selling, or they decide they no longer want to be in this market, then we will see continuation of the volatility, and we will likely see much lower prices in the stock market. That's why I believe in following the price action and following the trend. The one thing about the big money is they cannot hide what they're doing if we're watching the technicals. A lot of people get caught up in the noise of the news and they try to follow all of the stimulus news talks or what's going on in the rates, and they forget how important it is to just watch the price action. If you're a follower of mine, you know how strictly I always say watch critical support and watch the price action. So when we're looking at this weekly chart, there's no reason to get bearish on the stock market. While yes, we are seeing a lot of volatility, the broader picture of the stock market is still looking bullish, as I can now show you on the S&P 500. We can also switch this over to a monthly chart, and you could see that we did find support on the monthly chart at that 5 EMA. The trend is still very strongly bullish, and the price action is also strongly bullish because we're still closing over top of a positive sloping 5 EMA. So in the long term and the medium term, I'm still bullish on the S&P 500. We'll jump over to a 1 hour chart real quick, and we can see on the SPX that we have a very similar resistance trend line. The price action currently is bouncing off of a support level, and it's heading up towards that resistance level. What happens in the 1 hour time frame and the daily time frame is to be determined, but it is likely we could get rejected at that level and continue to head back lower. However, if we blast through that level, that will give us more bullish probabilities that this bullish trend is going to continue. So there you have it for the S&P 500, that we're still in a bull trend and the price action is still bullish, even though on the 1 hour chart we still have a very critical test that we're following. If you're on the Stocks Channel Discord, I'm going to be sending out a members only video this weekend to prepare you for both scenarios so that you're ready no matter what happens. Okay, so next up, we're jumping over to the Dow Jones, and this is the DJI, and again, this is a weekly chart. On the Dow Jones, you can see a lot more strength because the price action closed well above that 5 EMA. We're still in a strong bull trend because all of these moving averages are still stacked to the bull side. So with the Dow Jones, it's really telling us the most important story of all. This shows that the weakness in the stock market was mostly due to a sector rotation. We saw technology and healthcare selling off, and that's why the NDX got hit the hardest. The NDX is that tech-heavy index fund, and we know the S&P 500 is over 30% weighted in tech. However, with the Dow Jones, which is more heavily financials and industrials, we actually saw the week close in the green and closed well above the 5 EMA. So while we're seeing strength in the Dow Jones, and we are seeing temporary pain in the NASDAQ 100, the more likely scenario right now is that the bull trend is going to continue across all three indices. While the NASDAQ 100 is currently more beaten up and has more ground to catch up, it is still likely that it's going to start trending back higher once the tech sector rotation ends. Eventually, the selling will go away, and we will see buyers stepping back in and buying up those tech stocks. Remember that a lot of those tech giants are blue chip companies, and they have a ton of cash in their balance sheets. Those stocks cannot go down forever because eventually they will be a screaming buy and they will be a value buy. Currently, they could be considered overpriced, and that's why they're getting sold off, or they could just be the top performers that are getting sold off in favor of underperformers that are about to do much better in the current environment of the market. So it's so critical when you're doing technical analysis to be completely unbiased. I cannot look at the Dow Jones and show you how strong it is and tell you that this market is going bearish. That would be irresponsible of me because the price action and the trend are screaming bullish. Remember that I cannot make this up. I'm showing you data here, and the price and the trend in the Dow are looking very healthy right now. So switching this over to a monthly chart, you can also see on the monthly chart that we're picking up momentum, and the Dow Jones is actually gaining traction in this bull run. You can see these moving averages are actually creating separation from each other, which is evidence that the bullish trend is picking up momentum. On this monthly chart, we're currently trading at an all-time high as far as the closing price goes, and we're well above this positive sloping 5 EMA. So remember, in the long term and the medium term, I'm still bullish. That doesn't mean in the daily analysis that I do that we're not still going to look at bearish scenarios, because obviously all of this is subject to change. There's very important and critical support and resistance levels that I'm paying very close attention to, especially in the tech sector. If the tech sector continues to break down and shows weakness, it is possible that we could see weakness in the entire market. But right now, that's still speculation because we have to see the price action at those levels before we can see if this market is going to go bear or remain bullish. Now, another thing I want to do is take a quick look at Bitcoin. Remember that Bitcoin is highly speculative, and if Bitcoin is going higher, That means the investor sentiment of the market is still risk on. In a risk on environment, we expect to see traders and investors taking on extra risk, assuming the market's going higher. That environment means a lot of liquidity and a lot of money flowing in and out of the market, but the general trend of the market will remain up as long as everybody is willing to take on risk. In a risk-off environment, people will start panic selling and they'll be flocking to cash because they're worried the market's going to crash. Right now, with Bitcoin's price action, we're seeing a risk-on environment. Bitcoin is currently up about 3.5% as the time I'm filming this video, and you could see from this massive sell-off last week that we're getting a bullish bounce and we're starting to head higher. Remember that Bitcoin trades 24/7, so if Bitcoin is trading across the weekend, it does give us a little bit of insight in what might happen in the stock market looking forward to the week ahead. So currently, Bitcoin is telling us to expect a bullish week in the stock market, but that doesn't mean it has to happen that way. Remember, we're just looking at probabilities here, and right now it looks like the probability of the week ahead is going to be a risk-on environment. If people are in the Bitcoin market right now buying it up, it is very likely that they're going to do the same thing in the stock market. So we see Bitcoin trading above a positive sloping 5 EMA, and we could easily see how strong the bullish trend is in Bitcoin. So as long as we see this bullish trend with this bullish price action, we're going to go ahead and give Bitcoin a bullish bias to the upside, and we will go ahead and say that it's likely to at least retest the previous all-time highs. Whether Bitcoin breaks out to brand new all-time highs or not is to be determined, but the general direction of the market right now is still trending higher. Okay, lastly, I do want to take a look at rates, but just remember that I am a price action and a technical analysis type of guy. So I don't want to get into the fundamentals, but I do want to show you something from a technical standpoint. So while we do see rates exponentially increasing, if you zoom out here on this weekly chart, you still have to understand that rates are still relatively low. If we go back to about December of 2019, rates were closer to about 1.92%, and we're currently sitting about 1.55. If you remember back to last year, we did have a very strong bull market, and we're actually very close to retesting those December highs. So the lower the market goes, the closer we're getting back to those December prices. So don't look at the rate market too much, because if the rates are causing the market to look bearish, we're already going to see it in the price action in the trend anyway. I expect to see the price action tell me if the higher rates are going to be bearish on the market. I don't necessarily need to understand the fundamentals as long as I'm following the price action. So to summarize all of this together, I want to go back to the SPX. I still do have an upside price target that I do expect to see the SPX hit this year, which is up here around 40.40. We're currently heading towards that level, and I do think that that will be a price target that we will see in the year 2021. So this little bit of selling that we've had over the last 3 weeks is helping the market cool off and find a support level to build off of before it continues to head higher. So I want to remain bullish on this market until we see some critical support levels break down. If we see these trends shift to bearish, then we'll know that we likely seen the top in this market. But in the time being, I want you to remain objective, and I want you to look at the price action and look at the trend. As long as we're bullish on the price action and the trend, we need to have a bullish bias in the medium and long term. In the short term, don't forget that we're currently in a bearish bias, and we're going to remain in a bearish bias in the short term until we snap that downtrend and go back into an uptrend. So to show you exactly what I'm talking about on the daily chart, is you can see that these moving averages are no longer stacked to the bull side, and they're currently building up some bearish momentum. So it's very important to understand the time frames that I'm talking in, because it will help you better understand my analysis. So remember that I do daily stock market technical analysis on the daily and hourly time frames, so you'll always be in the know if you're following along. So if you haven't already, go ahead and smash that like button on this video and smash that subscribe button and turn on that notification bell. I'm going to be giving you very valuable educational content, as well as helping you follow the technical analysis of exactly what the market is doing day after day. So I really hope this macro level view of the stock market helps you better understand what's going on in this market. If you enjoyed this special educational weekend episode, please let me know in the comment section below. I hope you're all enjoying your weekend and looking forward to an exciting week ahead for trading. If you're looking for a trading community, come check out the Stocks Channel Discord. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So thanks for watching, everybody, and as always, I will see you in the next episode.